The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
No. It's not Dave White. Dave White lost his power today. Not feeling that great, and it's my pleasure to be sitting in for him, Mr. Power Vector Indicator himself, Dave White. So Basil Chapman sitting in for as part of the team here at TFNN. And it's just a pleasure to be here, although I do not do the kind of work, Dave is a systems-oriented both trader and investigator and developer, and I do not do that. I use a methodology that I developed many years ago called the Chapman wave. It's extremely visual. Certainly has mathematics involved, but mostly it's a visual. You identify the lowest low bar. From that, if certain signals occur, you should go from a buy signal to a buy mode. There should be at least 4 successively higher peaks. And I label them capital. That's uppercase A, B, C, D. It can go to E, F, and even a G, but D is really the objective. From there on, you've got other ways of monitoring and deciphering the codes and figuring out how deep a pullback will be, or whether it's going to go higher. Peak D is where you've got to be somewhat cautious. I have a song that goes with it, and it basically says that when it gets to D, it's when it flashes a cautionary light, but all you got to do is make your stops real tight. That's on the way up. So once again, Basil Chapman, my service is the Tiger. I have the Tiger Technicians Hour, Monday, Tuesday, Wednesday, Thursday, and Friday, 11 o'clock till noon. It's the same number, 877-927-6648. We've had fabulous programs today. Tom O'Brien took the first 2 hours. Then I came on 11 o'clock to 12. Then you had Larry Pesavento. This is Dave's show. Straight after me comes Ken Shree. Yep. Oh, Daryl was, that's right. I forgot. I was just listening to Daryl. Daryl Martin, fabulous show. Larry Pesavento, then Daryl Martin. Then I come along because I'm sitting in for Dave White. Normally it's Dave every afternoon at this time. And then you get, and this is very interesting, because then you get Ken Shreve, who does something, we all have different techniques, and Ken does, his technique is, the resource that he's used all the years is Investors Business Daily. I love Investors Business Daily. I remember seeing, I just forgot his name. Bill O'Neill, back here in Boston. I think it was 1985, maybe 86. I think it was 85. And there were not that many people. People just kind of sauntering around, kind of figuring out what it was. I loved the paper. I thought it was terrific. I had a little short chat with him. And, this is, I think it's one of the most innovative financial news forums. Business forums and chart forums. He started charting. The New York Times, if I ever had a chart, the Wall Street Journal only started putting in charts after they were forced to do it by Bill O'Neill's IBD. So, straight after Ken Shreve comes who? Tom O'Brien. Tom O'Brien, the master of the one who wrote the book on timing the trade, comes in at 4 o'clock till 6, wraps up the show, discusses all the different charts as per his identification of these different patterns, and full program 4 to 6. We go from 9 in the morning Eastern time until 6 p.m. That's amazing. I'm not sure there's another financial show quite like it anyway. So I'm real pleased to be here. Let's just run the numbers. The Dow is down 70. Oh, I forgot to mention the date this morning. The date is January the 7th, 2013. The Dow's down 70 at 13,365. The S&P is down 8 at 1458. The comp index is down 10 at 3090. You've got gold down 2 at 1646, struggling to try to find some kind of a base to rally here. We'll talk about it in a moment. Silver's up 18 cents. We've got high-grade copper down $1.20 at 368. Come back a bit from the lows of the day. Crude oil is about unch, and you've got bonds up 8.30 seconds. So this is what I do. Let me show you. I've got the E-mini here now. I know that Dave uses the S&P. I'll try to stick with the format whenever I substitute for any one of the hosts. I try to use the technique that I'm at least familiar with their discussions in terms of their technique. So I'll skip the very shorter term because I know Dave likes to look at the big picture. So let me just quickly show you that from the low bar of the E-minis, the S&P March contract, the E-mini contract made a low of 1382.25 on the 28th. Then it made a peak A. Remember, we're looking for those peaks. Peak A on the 31st, that just as the market opened overseas, went to peak B on the 2nd at 10 o'clock in the morning at 1452.75, peak C at 1458 double top on the 2nd, that was at 4 o'clock, and then again at 5:15, and then it went to peak D. That's the requisite. That's what we look for on the 3rd of January at 1460.50. You see the technique that I use, one of the many techniques, but you see this bottom indicator. The green and red lines are the slow-moving average of the stochastic. So these are exponential moving averages, and these are also slow-moving averages of the MACD, the moving average convergence divergence. There's the makeup right there, 1226.9, shows you green, red, dark gray, and then which has been covered, and then you've got the slow stochastic 14.331 and 20% and 80%. Now, is this on Memorex or is this Basil Live? In the Dan Gringo Ask. This is me live at 2:15 Eastern Time on January the 7th, doing Dave White's show. And then it pulls back. Now, you see how the technicals were pulling back? When I say technicals, I mean the MACD and slow stochastic. Pulls back sharply, but the price held. Why did the price hold? I was talking about this on my show. What is today? Monday. On Thursday already, I started saying, be careful. We could be in a rectangle formation, and 1450 would be the low that we've got to watch. 1450 was the low on the 3rd of January. Actually, 1451.75. I chose 1450 for a couple of reasons. And then the upside was 1460. Well, we snuck up to what I call a right arm extension. In my technique, there are patterns that repeat over and over. There are also patterns that are not necessarily rare, but they're rarer, and they have no other explanation than there's a divergence occurring and there's residual strength that just for like a wave that it's like a rogue wave when you at the beach and the sign says high tide at noon. So you go to there at the beach, you go there at 11:50 and you get yourself all ready. You say, oh, high tide noon, I'm going to go sit on my favorite rock out there because the tide's going out. You get to the end of the rock and you get your towel, and you got your sunglasses, you got your book, you got your whatever else you're going to eat and drink. And as you're about to sit down, splash, there's this one wave that just knocks everything flying. And by the time you wipe your eyes and look around, you don't see anything. The wave's gone back. Why? Because the tide was going out, and there was this one wave that never saw the sign at the beach. This is where you get that right arm extension, this move to the right, that as it takes out the previous high, very often it pulls back and it goes on back to the trend that it was following. Now, look what happens underneath the 9 EMA. So this is the 120-minute chart. And I just wanted to do that. Now I'm going to get rid of that because, I have a question. Then if I look at the IWM, absolutely. At a moment, I will look at the IWM. Whoops, I haven't finished notating it. But you remember I spoke about the peak Ds, how important in the Chapman wave? Look what happened. The Russell 2000 makes a low on the 16th of November at 76.13. This is the 120-minute chart. And then goes to peak A, higher peak, peak B, a huge gap. Remember the big gap? And then it goes to peak C, and then it goes to peak D on the 3rd of December at 82.76. Then it pulls back. It creates that same rectangle we were looking at, except this time it breaks up and it goes peak A, B, C, D, and it sneaks to an E. And that E is at on the 12th of December at 83.80. It pulls back again, holds this orange line, this 200 period. Look how important this 200 period exponential moving average is right here. And that becomes fantastic support once, twice, 3 times. It's just amazing. Anyway, it starts a brand new little buy mode. It goes to a very quick peak D. In the Chapman Wave methodology, maybe I'll show my CD introducing the Chapman Wave methodology book during the break. I'll set it up. And look what happens. You get this buy signal. I'm going to expand a little bit so you can really see. There you are. And it goes peak A, B, C, D. And at D is where there's a cup and ladle. It's called a Chapman Wave cup and ladle breakout. There's not a cup and handle. A cup and ladle means that you go right through the left side lip, invariably going to at least a peak D. Pop, it goes to a D, and it goes to the D right at 84.77 on the 18th of December. Above that blue line, which is the 9-period exponential moving average. Then it comes back down, makes a pattern that I call the H that goes to an M formation, plummets down again to the 200-period moving average. Now let's see where it is. It goes peak A, and all I'm doing, you have to identify each successively higher peak. Oops, the wrong color, so that make that blue because I'm using a white background. And it goes peak A, peak B, peak C, and it just made peak D right there. Let me double check. Always you have to check because 1 penny makes a big difference. 87.38, 87.38, 87.44, peak D, and the stochastics pulling back still very strong at 82%, but the MACD has made a huge turnaround in the fast-moving average. That's the green line. It is just crossing underneath the slow-moving average. That says I can put a plus sign above the D, not a down arrow yet. It says be careful because we might be testing over the next day or two, and this is what I was saying to my subscribers. My service is the opening call. It's a daily, extremely full newsletter every single day, 6 charts, 7 charts. I don't know how many charts I did today because I wanted to show a lot of things with a whole bunch of new subscribers there. I wanted to be able to show these patterns that I'm talking about right now. So the daily says, be careful. There's a lot of resistance on the upside between 87.07, is trading at 86.74 right now, down 50 cents. IWM, the Russell 2000 Index Trust, and certainly the high of 87.44 made on the 4th. The downside support is this bar right here at 86.37 on the 3rd, made at the close, just before the close. And the huge gap. And that gap, it was already rallying before the gap. It's been one of the leading leading indexes, 86.04. My suspicion is that over the next couple of days, even though there could be a rally to the upside, I think we're going to be doing some backing and filling to rebuild some energy to be able to push higher. Not lower, but higher. That's just the way I'm looking at it right now. So that's the 120-minute chart. But what we need to do is to look at the different time frames. We want the bigger picture. And we're in a leg deep to possibly peak D in the daily. I'll be back. Basil Chapman, 877-927-6648. Love to take your calls.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation information does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage of TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
It's not, I know it's not fun being ill these days. What can I say? And Steve also. So things are going around, and they kind of just sit there. What I'm doing here is I decided I'm going to try this out. I just want to look at the black background to see, for those of you who might be new to my technique, whether it's a little clearer. I want to grab the monthly chart of the IWM. That was a question in the Den. You know, the Den is this fantastic medium that we have here at TFNN to be able to see the charts. I know you can see it on I'm looking at it right now on Tiger TV. But what happens is that there are questions that are posed in the Den. People answer them. People show their trades. It's a wonderful resource, and so many bright traders. I mean, you say something about. I even get help when I misidentify a peak once in a while, when I miss it by a penny, and someone will say, oh, no, that should be peak C, not B, or whatever it is. So it's just a great resource. If I had to say right now, give me an ETF for whatever it is, a bunch of people would give it. It's just a great resource. So I am showing right now, and I want to do it on the black chart. I'll tell you why. I want it in a very quick visual to explain what I do, and I want to explain, I'm going to go through a couple of charts I'm going to go through some of the top IBD charts, Investors Business Daily charts. I know that Dave often looks at stocks like that. It looks at charts that are close in proximity to the type of patterns that are produced there. So let me do this. I'm going to show you the pattern that I'm looking at right now. Do you see this purple line right there? Let me see. Is that a purple? Well, you can't really see it's purple, but take my word for it. It's kind of a mauvey purple, and I'll just put the dots on it. That line there is a 200-period exponential moving average. I love the exponential moving averages. This is a very personal thing, and I tell people it doesn't matter whether you use simple or an exponential, whatever moving averages. Be consistent in your understanding of what you're doing, why you're doing it, and stick to it, because you're using it as a piece of information that constantly is there, and it's always giving you parameters that you could look at. So in this case, I just happen to like it because the exponential moving averages tend to hug the chart formations that I tend to like a lot. So let me show you a couple of things. Just at one quick glance, you see these lines that are going up here? That's a channel line. But within it, I've got something that I call the inside track. That inside track says that if the price bounces in and out of that like a ping pong ball in a can, just going up and down, within that formation, it says that's great, because when it gets to the bottom of the formation, you can buy. When it gets to the top, you either sell, or you can take something off, or you can be ready to put back on when it gets to the bottom, etc. But it's in a rising, higher highs, higher lows, which makes peak A, B, C, and it goes to a D right there, around about June of 2007. And then it comes down, and it comes down with troughs. On the way down, they use lowercase. It goes trough A, trough B, trough C, trough D, trough E. And that trough E comes in at 34.26. Where's 34.26? Right there, 32.20 was the low that was made back on October of 2002. This is a monthly chart. And lo and behold, I used to have this as a left side, right side price time match. I don't know if I got time. I'll do it right now. Look at this. There's a certain candle that I would identify. Either it's made a peak D, or there's a certain candle that I identify when I teach my courses on the Chapman Wave that I identify as being really important. And if you can identify that candle, it's either the middle, it's either what I call the plumb line, because it's made a peak and then it's reversed, or it is a candle of importance. And look what's happened. It gives you a left side, right side price time match, and it extends it a little bit. But that 34.20 started a brand new peak as the stochastic turned up and the MACD turned up as well. And from 34.26, isn't it remarkable that it went from 32.20 back in 2002 October to the high of the market made its high in October, but this made a high a few months earlier in June, the IWM at 85.17, plummets back to where? To 34.26, 2 points higher, 2 points and 6 cents higher. Isn't that remarkable? So it's a brand new move, and now where has it gone from the 85.20 high that it made back in June of 2007? It goes to 86.82. Then it pulls back to where? To that 200-period moving average at 63.76. And then it goes peak A, peak B, 86.95. And guess what? 87.44. It's made a new all-time high. That is really important, all-time high. I'll be right back. Basil Chapman sitting in for Dave White, 877-927-6648.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
That's David's monopoly. He invented it, discovered it, invented it. It's a fabulous, it's a work of art, in fact. What he does is he uses volume, and he has calculations that extend out. He uses different parameters, and basically what he says is when it reaches a certain peak or a trough, in a certain pattern, the measurement of volume at that particular point gauges for him whether or not there's still internal strength or weakness. I do something a little differently. We're all using the internals in different ways. What I'm doing, and I'm showing once again the 120-minute chart, even though I know Dave uses the longer term, but just as a quick visual, because this is so easy. Do you see this bluish purple line right here? That is, in fact, the 200-period exponential moving average. It happens to be on the 120-minute chart. All we do is we count each successively higher peak. Goes peak A, there it is. Peak B, peak C, peak D. You don't even have to know what this chart is. It happens to be the IW 120-minute chart. But look at that yellow line. That's the fast-moving average differential, nine-period differential based on the MACD 26 and 12 parameters that are given. And look at this. It crosses underneath the red line, which is the slow-moving average. But look at the price. The price follows that 9-period moving average right there. This is the 9-period moving average. Let me just show you right here. This is the 9-period moving average, the white line. And that says that's the support. It went just underneath the support, but there is some selling pressure involved. And that selling pressure says, okay, be careful. There could be a bit of a pullback. But the stochastic's still at 82%. And I say above 80%, it's still a very strong, there's still internal buying. So I want you to just go through that, make it a quick visual, and now let's do something else. And I'd love to take your calls at 877-927-6648. Of course, I cannot answer your questions in terms of Dave's work. Dave does that. He's the expert. But I can answer the work in terms of my work, which is the Chapman Wave methodology. As I say, my service is the opening call. It is a very comprehensive look at the markets, just all the different charts. I have it as a teaching. It's an exponent. It is a lesson in chart formations every single day. I show them. I show the Dow, the diamonds in the short term. They show the Dow and all the different daily, weekly, monthly time frames. Just an incredible amount of information. Now look at this. You see that blue line there? That's the 9-period exponential moving average. You see this left side to the right side? I took the plumb line right. Oh, I didn't take the plumb line in the middle. I should. Oh, I didn't, because I took it to a candle, a very important candle that is initiated first. It says that by the 11th of January, the 86.96 high of September should be approached, if not breached. Well, it did that in even a shorter time frame. It did that by breaking above 86.91, 87.28 on the 3rd of January. That says there's internal strength that is very strong, because it took an even shorter amount of time than normally would happen between the left side and the right side. Now what's going on is that you've got tremendous support. You've got the gap at 86.04. So that's just one chart that I want you to look at. Now let's look at something else. Let me just drag, let me see if I can do it. I've got it right here. Okay. IBD, I don't know what date this is. It's probably on the 1st of January. I should have done it for today. Anyway, I didn't know I'd be doing the show, but that's fine. DDD. Now, I know Dave's spoken about this. I've heard him talking about this. Now, this is with the white background. So let me just see how clear it is. Oh, yeah, that's pretty clear. In the Chapman Wave methodology, my black charts have it notated all the way. This one starts notation, and it makes a cup formation. 44.80 was the high on the 29th of August. This is 3D systems trading at 60.51, up $1.67. That's internal strength on a day like this. And then it makes a cup formation. It goes all the way down to a trough D at 32.35. Doesn't get to the 200-period exponential moving average. Instead, it starts a brand new buy mode. It goes A to B to C, just above the previous high of 44.80, but that's a very good sign to say it's breaking out. And then what does it do? It makes what I call it, that is a standard, like a cup and handle formation. One of my least favorites. They often pull back deep into the handle, sometimes even lower than that. But that's not to say they aren't successful. They have to be traded in a certain way. My only problem with it is that once it breaks out to the upside, very often the cup and handle, mostly it comes back to retest. The cup and ladle, where it slices through the left side lip, that would be at 44.80, that's the pattern I love. So this one goes to that peak D at 46.80, pulls back to a low of 36.53. That's a big percentage move, but on the chart it doesn't look so big, but it's a big percentage move. Then it starts a brand new buy mode that goes peak A, peak B, C, pulls back, breaks out to 53.04, that's D. Now there's something else that's going on. Now there's a pattern that says, is the leg that's unfolding right now brand new leg B, Or is there an unconventional instant restart? I don't even want to get into that right now. For safety's sake, I'm calling it G/B. There's an alternate wave count. Now you say to yourself, oh man, anybody could say that it's going up or it's going down. No. This says there's nothing to do. The waveform will articulate itself as it moves on because there is such a powerful MACD, moving average convergence divergence. The on-balance volume, you see that blue line, look at it shooting up there. It's getting a little overbought, but it's still very strong. And the stochastic is at 83%. So this is a powerful stock. It is in a sector, it's a leading sector. Oh, let me just tell you, talking about sector rotation, You've got Ken Shreve coming up straight after this. Ken is going to be doing a workshop, and it's a workshop, I believe it's for subscribers only. But there's a way you can do it. You can subscribe. You can have I believe a trial subscription even gets you into the webinar. Ken is a master of identifying strong stocks that are breaking out or have the potential to break out. I highly recommend this as a webinar that you want to attend. I highly recommend it. So, talking about breakouts, and I've heard Ken talking about DDD. Also, he thought it was a strong stock, then he was a little cautious, and it's become a strong stock once again. Now, 3D Systems is breaking out. Now, I've got this as leg F in the monthly, but this could in fact be an alternate wave count leg C. You see, what's so nice about the Chapman wave methodology is that there are moments where there's a touch of indecision, but the waveform is clearly articulated by using many things. You could use the breakout formation. You can use the MACD and the stochastic. You can use the 9-period exponential moving average. You can use Fibonacci expansions. But mostly what I'm doing is I'm saying if in the monthly chart, this is at 90% in the stochastic and 92% in the weekly chart, even though it's leg D in the weekly, this has the potential to continue higher. And all I'm doing is saying, okay, I'm saying leg F, which is always the one that you've got to be real careful of, could also be a brand new buy mode with leg C. Let me explain why. That D could be a down arrow, and that could be an up arrow, and then that would be new gray A, meaning it's underneath the previous high, and this could be E/B, and that could be F/C. So there's nothing to do other than, if you were long, to raise your stops. Don't even think of shorting yet. This is a powerful stock, a leading stock, as the market's consolidating here after a great move. So 3D Systems, in fact, I've been wanting to buy it for some time. It just got away. It just never pulled back like I wanted it to. For my subscribers, this is one of those that I love. So that's 3D Systems. That's using my technique. Nothing to do. It's moving beautifully to the upside. It will become a little overbought, I suspect, in a couple of days. And then the tremendous support right now is between, well, it depends where it stops, but very strong support between 58 and 55, looking at the weekly chart. Then you get FLT. I think I've done this all. Yep, FLT, which is Fleet Core Technologies, making leg C today in a brand new buy mode. So that's leg C, very strong. It's trading at, FLT is trading at 55.35, but it's leg E up. At this point, yes, I could use that technique that I call the instant restart, the Chapman wave instant restart. I always circle it to show what happened at the fourth peak, peak D. I can see the eyes glazing over right now. I know mine would. It's tough stuff. But let me tell you something. It's a fantastic technique. This could be an instant restart. This could be E/A. In the meantime, I'm just calling it E for now. Nothing to do. The stochastic's at 93%. That's very strong. In the weekly, 94% in the daily. It's leg C in the daily. And as long as there's a new high tomorrow, if there's a new high bar tomorrow, even by 1 penny, just 1 penny, that extends leg C. You only get a peak when there's a lower high bar. And look at this, you're only in leg B. This is a powerful stock. This is going to be a real winner for 2013. It's only in leg B in the monthly chart. Never gave me a chance to get in. But this is the kind of chart where you use the 9-period moving average, which I should have done. I actually looked at it the other day. But we had other positions that have done nicely. So I didn't take it because I wanted it to dip a little bit underneath, and then I thought, okay, that would be the time to buy underneath the 9-period moving average. It's called hugging the 9-period moving average. Isn't that a beautiful chart? So now This is another one. That's great. This is number 2 in the IBD. Now there's another one, CVLT. CVLT, which I had this morning as a short, and then I took it off. I said, you know what? I don't know if I want to bother with a short. We've got another short going on right now, and the short was going to be at above 71.31, I think it was. Well, the high today was 72.56. And it's trading right now at 69.05. Well, you know, sometimes these things happen. You get a little nervous. You just suddenly change. I must never change my mind. I hate when I do that because you think it through. Your decision is your decision. Happens to all of us. It happened to me. And didn't lose any money, but it would have been a nice trade. Why would I short number 3 stock on the IBD list? Because I haven't got it here. Because my daily chart was saying there's a pattern that's forming with the technicals failing, and that says that any rally should fail very quickly, because as long as the stochastic is at 66%, which is very weak in this case, and the MACD is deflecting low, you see the green line, the fast moving average slipping down. That's but my concern was only I was anticipating a signal in the weekly chart. I'm still anticipating it because this is one of the strongest stocks. Money flows right in to these best stocks by the money by the fund managers. But you see how quickly it's gone to peak A, peak B, peak C, peak D, E, and a possible peak F here at 72.93. That's really what I was thinking. That there could be at least a high-level consolidation using a very tight stop. 1.5 points, 1 3/4, it would have been great. And then if it broke under the 9-period moving average, it could retest the uptrend line at maybe 64-ish. So a big chunk of that moves down. I'm not sure it's even worth looking at. And the monthly chart was in leg D, possibly a peak D if there's no new high this month. But I shouldn't be fooling with this at 90% in the stochastic. So it would have been a nice trade. And maybe if the market's up tomorrow, this would have gapped up because there's still buyers there. So it's not a trade for me. That's number 3. Had a question then, would I look at MGAM? I looked at this once before. MGAM. I hope it's on this chart. There's nothing there. Multimedia Games Holding Company. So let me do this real quickly. Here's what I'm doing, folks. I'm looking at the monthly chart. I pull it back as far as I can because I always want to identify the lowest, most identifiable low bar. Well, that's the low of 1.55 February of 2009. And now I just merely count each successively higher peak, but you've got to make sure you get the peaks because if you miss a peak, you're in the wrong wave count. You don't want to be doing that. So let me change the color. White background. Got to have blue letters. 610, 607, 60. There it is. So that's A. B, did it make a C or not? 635, 647. So it goes to a C, and then what happens sometimes after a sharp decline, the first rally fails at peak A, B, or C, and it pulls back. But look, it made another A to B, so this is going to be D right here. I'm not going to make that an instant restart. I'm going to call it D, E, with a possible peak F, and so far this is the longest and deepest consolidation since it started this big move in mid-2011. So that tells me, got to be a little careful here. Let me just quickly do this chart here. A, B, C, D, E, and there's your peak F. That's the one that you've got to be real careful of. And the monthly chart says back in 2004, made a peak F, and it cascaded from the mid-20s down to the most recent low that I say there's 1 point something or other. All right, so now I know the character of the stock. Now I can look at, so the monthly chart says high-level consolidation so far. It's MGAM trading at 14.08, Multimedia Games Holding Company. Aha, I hear the music. And I'll just quickly do the weekly chart, and you're going to see something very interesting. And then I'll do this real quickly during the break. I'll talk about it, and then when we come back for the last segment of the show, I'm going to run a whole bunch of charts, and you'll see what I'm looking at overall. Basil Chapman sitting for Dave White.
Are
Are you looking for a precision edge in the market, something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
The monthly chart says that it is in, at least for now, it looks like it's at 1406. If it goes under 1370, that monthly chart is going to test the wick, what I call the Roman candle wick of last month, and that should go into the 1340 area. If it breaks that, you're talking about 1326. That's the candle that's a really important candle. But the MACD so far and the stochastic are pretty good in the monthly chart. However, the weekly chart is very weak. W-E-E-K is W-E-A-K. Very weak. And I would suggest to you that if you're long, you better be careful, because the daily chart is going to confirm what the weekly chart is saying. If it takes out 1363, the 200-period moving average, and closes under it 2 out of 3 days, be careful, because this could go very quickly below that key support of 1326. So right now, I'd say I'd be a little cautious on this stock. It's trying to rally. It's in a rectangle formation. It could bounce between the levels of 1363, maybe 1350, and 1446 to 1480 for a little while longer. But if it takes out the downside, I'd be real careful. What you want to see if you're long, you want to see it reverse and take out the high of Friday, 15.18. So now let me do this. So I hope that helped you in the den. And here we go. WOOD. I did a lot of work on this over the last couple of, maybe last week, I'd say. Wood is the iShares Global Timber and Forestry ETF. It might be an ETN, I'm not sure. And in this particular case, it's making what I would, so far all I can call it is a peak F. I think it's a peak F top in the Chapman wave in the daily. That says to me, I've got to watch this real closely, because there was a cup and ladle breakout. Beautiful left side, right side, does all the things I talk about. The left side chart is my daily. The middle one is my weekly. If you want to see my show, I talk about these all the time. The right one is my monthly, and when I drag this up, that's the 120-minute chart. I don't have a sell signal. The 120-minute chart says yes, it could be pulling back. And if it takes it 46.34 right now, if it takes out 45.78 somewhere around there, I'm pretty sure that it's going to be pulling back. But 45.75, that's really the level. That's the 9-period exponential right there, and that starts to fill the gap. So while I don't have a sell signal on it right now, because the technicals are still very strong, this is where I'd be a little bit cautious, but I would only treat it as a short-term sell. So that's WOD, because in the dent was mentioned about lumber. LBH13, I hope I've got this down here, LBH13. Yes, peak E-top has already been made in the daily chart. That's lumber futures. That's the random length lumber. I love random length lumber March 2013. I don't trade these, but it was mentioned in the day. So it's got a peak E already, and so this is pulling back. And in the weekly, it's going to it's already confirmed a peak D, but the MACD and stochastic are very strong. So there, I'm looking at 381.70 right now, 370 to 362. 60, that's the area to watch. But I'd only say if it closes on a weekly basis below 368.70, that was the low of last week, then there's a problem. So, okay, want to do that. Now let me just go through the charts that I'm looking at in the remaining few minutes. The Dow right now, on a daily basis, it did a whole bunch of things for me. It went left side, right side. And then left side, right side says that the 13,290 level was the right shoulder that need to pierce it decisively. Well, it went to that peak F top, 6 higher peaks. That's what you look for in the Chapman wave. And look at the fast moving average of the MACD. Beautiful. Then it crosses negative at peak F at 13,365. And it goes where? It goes down to the low of 12,883. I think that there's still more room to go on the upside based on the volatility index. I'd be watching great support at 13,286 on the Dow. If there's a new recovery high above 13,500, that's great. Thank you, everybody, for being here. My service is the opening call. Check it out. And I'll be back at my show tomorrow at 11. Stay tuned for